Hey guys, Mubarak here in Penny Stock. In this episode, I want to talk to you guys about when is the ideal time of day to trade, buy and sell stocks, crypto, any kind of investment kind of in this liquid stock market, penny stocks. So we're going to be covering that, all right? There's certain times of day that there's the best time and ability for you to make a profit or the highest volatility. And I'm going to explain why in this video certain traders are able to get away with just trading 1 hour a day and still being insanely profitable. Okay, so this is an interesting Investopedia article. I'm going to just run it through. Generally speaking, Investopedia has pretty accurate information. Sometimes it's more so just that their whole goal is to just kind of pump out content. So I found it to be a little bit dry, but I want to go in and kind of tell you guys examples of how to understand the stock market day and how you should plan accordingly. Okay, so first you have to understand when the stock market is open. All right, it's not like cryptocurrency or options or futures where those have Forex has a 24/7 market, and that becomes intense, because then there's no real off switch. People are trading all hours of the world, and you don't have any time to sit, research, study, figure out what's going to be profitable. So what I recommend is, if you look at the stock market, it's only open from 9:30 a.m. Eastern to 4 p.m. Eastern. Okay, that's Monday through Friday. So if you're looking to trade the U.S. markets, doesn't matter where you are in the world, that is the time frame and time range that you'll be limited to. And that's actually to your advantage. All right, that way you can go in knowing what stocks to look at. You have time to create a watch list, a journal, research, study. Because just like anything else, trading is a skill, right? Just like a sport, just like a game, the more you do it, the more refined you'll become at it, and the more you'll be able to be successful. Just like in basketball, right? You're never going to make every single shot. Doesn't matter how good you are, there's a percentage of success that you're going to have. Trading is the same way. Unfortunately, trading is a little bit more risky because, in basketball, you miss a shot, whatever. In trading, you miss your shot and you're going to lose money. So you see the effects immediately and they're more financial right off the bat. But successful traders, all they're doing is two things. They're one, optimizing their profits. What that means, it's a fancy word. All that means is that when they go long, when they go for profits, they go as long as possible. That doesn't mean to get greedy, okay? But they're able to lock in 10, 20% on their trades. On the flip side, and this is probably even more important, honestly, I should have done this first, but the reason successful traders stay in business is because they minimize their losses. All right? You're going to see once you start trading that you'll get into a trade and now the adrenaline is on. Okay? Now it's very interesting. The stock price is changing in what seems to be an unknowing fashion every couple of seconds. And even though you know your hypothesis, you know that, hey, listen, I've followed in penny stocks, I followed Mubarak's rules, I traded off of this news and this breakout. Now he's telling me I should have a large percent chance to win, all right? But there's still certain things you need to keep your eye on, even after doing that type of trade. Basically, you have to understand that the stock price will never just arbitrarily go in a certain direction. So if your hypothesis is wrong and the stock market is going in the direction that you did not think it would, then you need to make sure you just cut your losses quickly and move on. All right. I always set pretty much a stop loss mentally. At 10% loss, I'm going to get out. The reason that's important is because, what happens is if the stock is going the wrong way, right? You thought it was going to go up, now it's going down. And you're like, oh, why is this going down? It's not making any sense. It's fine. Just sell at a loss and move on. Now you're going to tell me, you're going to leave a comment below that, hey, Mubarak, I sold too early. I took the loss even though that stock went up another 50% if I just held on. Well, you know what? That's the reality of the stock market, okay? Because what you're going to do is you're going to think, oh man, you're getting greedy. What's going to happen is you're going to say, oh man, I sold too early that time, right? I sold too early and I took a loss, even though my friends held and they made a profit. Unfortunately, the next time around, when the stock price is going down, you're going to have a stupid idea in your head. And I'm going to tell you this now because every single trader in the world has had this stupid idea come into their head every single day, which is, oh, the stock price might go in my direction. For whatever random reason, you're hoping and praying for falsehoods of the stock going in your direction. Now, if you don't set that loss, you're going to lose your whole account. That's how people get burnt out of the stock market, because they don't end up selling when they should. Okay, that's because of greed and thinking that you're going to just turn around randomly. However, if you make sure you drop that loss quickly, sell, you can get involved in other future successful stock trades. Okay, so sorry for that side tangent. Still a super important tactic, but let's continue talking about the best time of day to buy and sell stocks. Now you can see here, it says in the morning at 9:30 to 10:30 a.m. is usually the best time to trade. Now, why is that? Let me explain. I've had friends that are very successful traders that only trade within this time frame, and then they're done. They do 1 hour of trading, they're done by 10:30, and then they live the rest of their day doing whatever. Sometimes these people don't even have another job. They've just made their profits or made their trades for the day. And the reason for that is because, as you can see here, it says the biggest moves happen in the shortest amount of time. And that's because, at 9:30 is when the stock market opens. That's when all of the majority of the amount of orders that have been queued up and placed in overnight are triggered. Okay, so unless you have after hours trading, which is small frames of windows here, after hours trading in the stock market. Different stock exchanges have different hours, but what you can see here is that certain exchanges actually allow you to buy and sell stocks after, it's called post-market trading. So between 4 and 8, and also sometimes a little bit, there's also something called pre-market trading. But before we get into that, let me continue here. So the reason the morning is the best time to trade, or has the most volume, is because all of the orders that were placed start getting triggered at this time. So you see insane spikes in activity. So let me even show you here. Let's take a look at even this 1-day chart of Shonli XNet, right? In a prior video, I'll show you how you can make $900 in 2 hours with this trade. But you can see here that the craziest spikes happen just in this time. Look, this is the largest kind of momentum gap price action that's happened in just 1 hour. After that, for most of the day, it stayed pretty much within a certain range. And then again, what you'll see is at the end of the day is also the largest time, anywhere from kind of 3 to 4 o'clock, because that's the end of the stock market day. And the reason, that's what you're going to see is that you have to understand the day traders or the normal trader's life is that most of the trading is happening by people just putting in buys, putting in sells, doing research the day before. And so all of those orders trigger here. Then throughout the day, it's just normal trading activity. You have, decent volume. And again, I'm not saying that crazy action cannot happen here. I'm just telling you guys the law of averages and what to be aware of. 12 o'clock, lunch. I know a lot of traders that sell their positions, and go away from 12 to 2. They lock in their profits, they do their trades. 12 to 2 is kind of the slowest part of the trading day. And then finally, as you get closer to the weekend, not the weekend, but the end of the stock market close, people, especially in the penny stock markets, okay, in the OTC, the pink sheets, especially in here, they don't want to hold the stock overnight. Okay, and that's very important because penny stocks have a lot of volatility. They have a lot of risks associated with them, right? And so I always recommend that unless you're very sure or very particular, I wouldn't recommend holding a stock overnight that's in the pink sheets or in the penny stocks market. Because what'll happen is, especially if a stock has a lot of trading action, anytime that happens, the SEC will come in and they'll actually halt trading. SEC halts trading of stock. That happens all the time. And when that happens, unfortunately, you'll be stuck in your position. You won't be able to buy and sell the stock. So I think actually there's a whole list of trading suspensions for different stocks. You can see a couple of them are these Chinese companies. But the problem is that if you get stuck holding this stock and the SEC holds it, unfortunately, you're probably going to lose a majority of your money, unless you shorted it. If you were shorting it, what tends to happen is that these stocks end up going to zero. and you can't do anything. You're kind of just stuck watching your account go down and down in value. So always beware that, I would not recommend anyone, unless they're sure that some great news is about to come out, certain earnings, but especially for any China company. And again, this has nothing to do with, not a racist comment or anything. And this is not investment advice. This is purely educational from what I've seen. Is holding it overnight usually tends to, when there's a lot of volume and a lot of shares or a lot of price activity happening, it'll end up causing the stock to be halted. So you want to avoid that. But I want to show you an example of even like taking a look here, this 5-day for SES. SES was an amazing penny stock to short that I unfortunately missed. I did not ride this crazy wave of going to $19.50 from $1.80. I know people who made thousands and tens of thousands of dollars off of this. I'm sure in Tim Sykes' chat room or some other chat rooms, people have made hundreds of thousands off of this trade. But these types of trades happen every couple months in the penny stock market. And if you're on the right side of it, you can pretty much cash out, go on vacation, buy another house. But yeah, let me go here. Let me just show you the 5 days. I want to just quickly show you guys the volatility that happens in the morning versus the rest of the day, right? So again, this is just Google. You can always look up stocks just by typing in the ticker symbol and typing in the word stock. No fancy software. This is all free information. So you can see here that in the morning between 9:30 and 11:30, that's when, boom, that's the highest volatility. This stock dropped $1. Then the normal rest of the day, it's kind of in the same range here, okay? Then let's take a look. Near the end of the stock market day is also a large time where it drops, right? If it drops large, usually the next day there's also a lot of momentum. So keep an eye on this top bar here. It's showing you the time. And it's very important because this has to take factor into your trading day. You have to know that in the mornings you're going to have crazy amounts of volatility, which means that it's going to be harder to put in limit orders, right? You might need to ride those market orders if you want to get in on the trades. And you're going to just see large amounts of price action happen. You can see here, boom, at the end of the day is when the volatility happens. And then in the morning, there's a different peak. Same thing here. Morning 9:30, that's when it kind of dropped off. And then the rest of the day is pretty much in the same general range. So definitely something to be aware of. That is the way you should treat your trading. I'm going to do a part 2 of this where I talk about after hours trading, before hours trading. Oh, battery's about to die. Before pre-market and after hours trading, and the time of the day of the week and the month. Okay, because if you're going to be doing this properly, you need to understand all of the circumstances. You need to know how to make this system benefit you and increase your statistics of winning. So hope you guys enjoyed this video. If you have any questions, please leave a comment below and I'll answer you guys, because I don't want to give you guys generic advice. So if you have a stock you want advice on, you have a question about your trading, about your broker, let me know and I'll provide as much advice as possible in the comment section. Or if you have more private information that you want to discuss, you can email me at admin, ADMIN, @inpennystock.com. Hope you guys enjoyed this video, and I'll see you guys next time. Take care.